Hi friends, welcome back. Want to give you an update of what's going on in the stock market today, and let's just jump right in. So we actually see the same thing that we saw yesterday, where we have a lot of red in the market, and essentially Nvidia is green. That's what's going on. And it was interesting. I looked into it, and I found a couple of things which I want to share with you guys. You can see here S&P 500 post first losing day in 3 as Nvidia's climb fails to lift market. Dow Jones drops 400 points. And essentially, I think what's going on is that there's a bunch of traders betting on Nvidia, and a lot of this is leverage, so it can move very, very quickly in either direction. You can see here, Nvidia stock surge fueled by short-dated call option squeeze. They may be dated for this Friday, so we'll see if this Friday ends up being the peak of this stuff. I just find it really odd that, Nvidia is still climbing when everything else is falling. One of the things that, and I'm guilty of it too, guys, I'm just telling you the truth, is that there's a lot of ETFs out there that allow you to bet on either side, to be their short side or long side. And if you've been following this stuff, you probably know about these kind of things. So, for example, they were saying here, some people have been piling into NVDL. So that's up 450%. Whereas if you just do the regular, NVIDIA, it's up 196. So again, a lot of this is based on leverage money. There's another issue going on as well, which I think money will be flying around even faster in the markets. You guys probably got a email from your brokerage recently. Essentially, they're shortening the settlement period, meaning that things will just move quickly, right? Money will move quickly, and your trades will settle faster, so then you'll have access to your funds sooner. I mean, you got essentially more availability of borrowing, basically is what it is. Also, too, things that go faster. And you get sort of these crazy concentration of bets in this situation, Nvidia. There's another situation going on as well in the markets, which I want to bring your guys' attention to. This one is something that I don't think people are talking enough about, but I noticed it the last couple of weeks, and I just want to mention it today. It says, stocks sink as bond sell-off fuels jitters. Now, who's selling off bonds? From what I can tell, I think it's probably China and Japan. I see this right here. It says China sells record sum of U.S. debt amid signs of diversification, right? And we've been talking about this decoupling for a while. I'm talking about China. The Japan situation is different. I don't think they're going to decouple from the USA, but they have their own economy concerns over there. And there's been talk that Japan may or may not raise rates soon and try to get more and encourage more investment in, since their local markets. With China, though, you can see they're selling off U.S. debt. And I noticed this headline the other day. I didn't mention. I'm just trying to put this all together for you guys. This is just out just a week ago. Alibaba, which is one of the big China's tech stocks, they're doing a 4.5 million convertible bond thing. So basically, hey, give Alibaba money, sell off your U.S. debt, get some stuff from Alibaba instead, and essentially encourage investors to move back into the Chinese market. And then what happens is that when the USA tries to sell its debt, basically like because we're deficit spending, we got to fund a couple of wars and fund all the things that we want to do. And if China and Japan aren't buying said things, and they buy our stuff, buy our debt, help us fund our economy and keep us going, then the rates have to go up because they make it more attractive for people to get in. So that's sort of what I see going on here. And I'd like to hear you guys' thoughts as well if you've been seeing this stuff also. So again, I think this is probably the bigger headline though, which is right here. China sells record sum of U.S. debt amid signs of diversification. If you take a look at the markets as a whole, and I'd like to track this stuff with you guys, you can see everything was down today. So be it your S&P, your NASDAQ, right? Dow, small cap, micro, mid. And people ask all the time, hey, Chris, what should I do with my money? Let me put it this way. I don't want to manage your money, but I do want to keep you informed. Generally speaking, you're always best with, going with some sort of S&P index, something that tracks that. You're best maxing out your 401k, so your employee matches those kind of things. Get that as your base, right? So you don't have to stress about, picking which are the winners, which are the losers, because any given year it could be different. So this year, which I mentioned before, I think it's unhealthy to our markets. Nvidia is the big winner. At this point, I think it's like around 40% or even half of all the S&P 500 gains are Nvidia. But eventually, I think that bubble is going to pop. There's just no way you can have one company, prop up the whole market forever, or one industry, be it AI/chips. If you look at this though, which I want to show you guys as well, look at everything here. All of the sectors were down today, right? From communication, tech, discretionary, right? Real estate, utilities, energy. Utilities was making a little bit of a pop back. But again, this is sort of why you stay diversified. So you don't have to necessarily stress out about this. That's why I mentioned that, just do an S&P 500. And then if you want to concentrate on some other things after that, you certainly can. Again, it's your money. But I also want to make it really clear, guys. I want you to have a holistic approach on these things. Be concerned about your job in the sense of like, just make sure you're always upgrading your skills so that you're useful, or how can I say necessary, or what's another word where everyone like relies on you, right? They can't live without you. Make yourself, unfireable, if that's a word. I know it's not a word, but I just want you to be always, improving yourself out there, and both in your skills and also in your relationships with people. And then, pay off your debts. Don't overextend yourself. These kind of things, but just good, sound financial management. And this is sort of stuff that I like in our community when we have these like just honest conversations about this stuff. I think there's too many channels out there that are just like hyping you up all the time that you're going to get rich, tomorrow, that kind of stuff. I want you to be thinking, how can you build a sustainable future for yourself and your family? This is also too what's going on in the markets, and this is why you pay attention to everything. Just get a sense of what's going on here. Growth was down, everything was down. Momentum, quality, equal weight. And anytime, if you guys ever want to look at what's in this kind of stuff, you can just, Google any one of these tickers, and then you can say, hey, holdings, and you'll find what's in it. And it'll help you learn sort of like how you categorize different types of stocks. If you want to take a look at the Treasury, right, the bonds, 2-year 4.98. When this hits the 2 and the 10, hit it close to 5%. It's hard for stocks to move up because people essentially are diversifying their holdings, right? And the other thing too is we got a report from the Fed. What's going on with the beige book here? And what this is, it just includes those reports of different regions in the U.S. It's interesting when you read through this stuff. I noticed a couple of similar themes. So for one, for example, this is San Francisco that says restaurants across the district reported slower consumer spending, with many customers replacing dining out with eating meals at home. And I'd like to hear your guys' thoughts on that as well. Are you cutting back on your eating out, and are you eating at home? That's what people in San Francisco are doing. What about Minneapolis? They say here, a Minnesota winery and restaurant said it was seeing lower average spending among patrons. Guests are very careful with their money. We see less of our regulars and more moderate spending, right? So people may be still going to restaurants in Minnesota / Minneapolis, right? But maybe they don't spend quite as much. So maybe you go out, maybe you only have, one wine. You don't necessarily buy 2 bottles, that kind of stuff. Another one in Chicago, spending on groceries and restaurants rose. So that's interesting. Discount store sales were up. So Chicago is different than Minneapolis and San Francisco. And I'd be curious, maybe you guys got more money over there. Who knows? This is Boston, and it's fun to read through these things because it's it gives you a sense of what people are saying around the country. Labor demand weakens in Boston. Labor demand weakened somewhat as job openings fell slightly, and layoffs picked up a bit again in Boston. A large clothing retail let go 150 workers by closing a call center, citing the shift towards more automated customer service technologies as the driver, right? So replacing people with AI. In Atlanta, they're saying here, several Florida firms said that declining housing affordability, which is not surprising, right? Declining housing affordability hindered the ability to attract talent. And one nonprofit noted that more employers are pondering building workforce housing. Oh, that's interesting. Huh. And I'll be curious if you guys, anyone out there works for a company that, where your company helps you with housing. That's interesting. I'm trying to think of any companies that I know of in USA that do that. I'll just say universities do in USA, depending on which university you teach. You'll go and they'll have places for professors. It just makes it more attractive because if you want to hire someone and there's nowhere to live, right? Because the prices are too expensive, it's just not worth it. But if you if you give them a nice place to live and you subsidize that through your essentially through the company / I'm talking about university here, that would be a thing. It is common in other parts of the world where they do that. Or for example, if you're with an American company and they send you abroad, sometimes they'll include your housing with that as well. But that's interesting. I hadn't thought of if any company. So I guess it would be in Florida if they're building housing down there for workers. So let me know on that. Here's one from Kansas City. So it's fun to read through this stuff. Amid difficulties to pass higher materials and input costs onto customers, right? It's trying to pass the costs onto you. Many contacts reported being willing to change selling prices more frequently compared to last year to protect margins when possible. Okay. So this is all the kind of the stuff you're going on. Moreover, I noticed this as well. Unemployment's ticking up a bit. It says here unemployment rates up from last year in 78% of U.S. metro areas. So the big cities, many of them, unemployment is up. A lot of this is actually California. I noticed this, and then the one that's where unemployment's up the most, I guess, was Las Vegas, which is not California, but I'm saying the Las Vegas, Henderson, Paradise area. So if you're in this area, I'd like to hear from you. Is that a slowdown in essentially the casino market? I don't live in Vegas, so I don't know. I've been there, but I'd be curious if that's what that sort of shows. I can see New York is also facing an uptick in unemployment. Yeah, but like California, Seattle, Tacoma, Bellevue, also an uptick in unemployment. These are the ones that have the highest. You have Cincinnati, you have Columbus, right? So it's all over the country. And then these are ones that grew quite a bit. They're not necessarily the highest unemployment compared to the other cities, but they've risen. So that'd be like your Providence has gone up, unemployment that you're talking about here, Baltimore, Seattle, Detroit, Columbus, San Jose, Cincinnati, and then even Portland. I grew up in the Portland area, so I know about this stuff in terms of like I know these areas. But again, I'd like to hear from all of you. And in terms of what's going on in the markets, particularly Salesforce had their earnings report. I guess their forecast wasn't so great, so the stock is down 16% after hours. And then there was one, this is Salesforce here, and then there was one hype company, which is kind of a funny one because, and I'll show you what I mean by funny. This is a C3 AI. They run a ton of commercials on CNBC. I've seen that before, where it was like a huge hype play. Basically took a dive from there. It had a pretty good run from the beginning of 2003 up to now, and I don't know exactly what it's up, but I know it's up a bit. It's up another 9% now. But the reason why I say this one's funny because whenever I see a story about them, they always show their headquarters. And like they show this weird picture here of like an apartment building essentially. I mean, you can see right there, and it says C3 are hiring. And I always wonder if this is a joke or not. But every time I look in this thing, that I guess that's where they really work. But who knows? If anyone knows about this, you can let me know. It's just a odd picture for this kind of company. And the other thing that's also kind of always been how can I say a turnoff for me when looking at this one is they keep losing money. And their losses keep increasing, right? So this is, you can see I go in that direction. You can see here that's their yellow line is their net income. It's going down, not great. But this sort of represents the market that we're in, which is a hype-driven AI market. That seems the things that be working. You guys know recently Elon Musk is like, yo, I'm raising money over at XAI, and whether or not he's going to take technology from Tesla. It's an interesting question. And someone in the member community emailed me about this and was saying, hey, is this legal what Musk is doing? I'll have to really think about that, meaning that you're holding, a company hostage or saying like, hey, if you don't vote for me, I'm taking all the tech and going somewhere else. But he's always making those moves, right? Going over to XAI, and he's got the backing of ARK again. I think this whole thing is pretty shady. CNBC was advertising, hey, if you want to invest in Elon Musk, you can do it through their venture fund. And I guess Cathie Wood is already, dumping money in this thing. So my guess here is they're going to try to raise a bunch of money in private markets, get this thing going, and eventually, go IPO and sell it to you. And the thing what I find really, how can I say, questionable and shady about what these people are doing lately. Musk was tweeting this out just 3 hours ago. I decided to check before I make a video what he's up to. But this was an odd one. He goes, thanks, Chamath. This is coming from Elon Musk. And he's tweeting out a 2019 video. So it's like 5 years ago of Chamath singing praises to Elon Musk. And I think a lot of kind of what we see with many of the, I guess you could say memesters or stock promoters on YouTube and social media, etc., is they're living off this, things that happened years ago. And what I try to do with you, and I hope you understand clearly, is to talk about what's going on today. I think it matters, a lot. This 2019 stuff is kind of weird, and I have a feeling, and because people have asked, what's going on with the Musk thing, I have a feeling it might be getting call and pressure on the Twitter deal. If you guys don't know, he had to borrow, I think it was like 13 billion on that thing. And it's some ludicrous number, like $1 billion a month, or no, a year. I don't think it's a month. I think it's a year in interest, because it's like 10% or whatever he's got to pay on that. And if you're in the hole that much, billions of dollars, guys, 13 billion, to buy a company that's losing money, I think things are worse than they're letting on. And so he's out raising money for this XAI stuff. And just the way that he behaves is strange, which is strange in any number of ways. But I just wanted to bring this up because I think this sort of captures our absurdity of the market, and sort of when I go back when chatting with you is when you think about your world, don't get sucked in the hype this much, because you will get burned by these kind of people that say, hey, look what I did in 2019, I'm so awesome, give me more money. Focus on taking care of yourself. Again, pay off your debts, diversify. Don't feel like you have to put all your money in one basket. That's not really a great strategy. And stay cool and calm-headed, and come back to this community, and we'll have some real chats about this kind of stuff. So that's what's going on in the markets today. I'd like to hear your thoughts as well. And what do you think? And I'll catch you all in the next video.